What if I told you that 4 Bitcoin spot ETFs have quietly emerged that could make Coinbase not totally useless, but dangerously close to obsolete? Not next year, not in a decade. Right now. These ETFs are changing the way regular people buy Bitcoin, and the shockwave they're sending through the crypto world is bigger than anything we've seen since Bitcoin first hit the mainstream. Whether you love crypto or you're still trying to figure it out, what's happening right now affects everyone who cares about money, technology, or the future of investing. And by the end of this video, you'll understand why these 4 ETFs could be the biggest financial plot twist of the decade.
Hey, real quick, before we jump into the video, please take some time to read the full disclaimer on the screen.
Before we dive deeper, ask yourself this. If you could buy Bitcoin instantly, without making an exchange account, without storing passwords, without worrying about hacks, and without dealing with crypto drama, would you do it? Think about that for a second and leave your answer in the comments. Because millions of people just said yes, and Wall Street noticed. Now here's the twist most people aren't ready for. Coinbase built its empire on being the gateway to crypto. If you wanted Bitcoin, you signed up for Coinbase. If you wanted Ethereum, you signed up for Coinbase. If you wanted to join the crypto revolution at all, there was a 90% chance Coinbase was your first stop. But everything is changing faster than most investors realize. These new spot Bitcoin ETFs don't just let you buy Bitcoin. They let you buy Bitcoin inside your regular stock market account. No new platforms, no crypto wallets, no seed phrases, no technical steps. And the craziest part? The people buying through ETFs aren't just crypto fans. They're regular investors, retirees, financial advisors, hedge funds, and even companies looking to add Bitcoin to their balance sheet. So let's talk about the 4 ETFs at the center of all this. The 4 that are pulling in billions of dollars. The 4 that are making Wall Street say, hey, maybe we don't need Coinbase anymore. And don't worry, I'll explain this in the simplest possible way so anyone can understand what's going on, even if you've never touched crypto in your life. The first powerhouse is the BlackRock iShares Bitcoin Trust. BlackRock is the biggest asset manager on earth. They handle trillions of dollars. When a company that big decides to offer Bitcoin to its clients, it's like opening a door the size of a skyscraper. Millions of people who never had access to Bitcoin suddenly can buy it with one click. And because it works like a stock, they don't have to learn anything new. They don't even need to know what a private key is. For years, one of the main reasons people avoided Bitcoin wasn't fear. It was complexity. BlackRock solved that problem overnight. Now imagine being Coinbase and watching that happen. Next is Fidelity. They're one of the most trusted financial brands in the world, and they launched their own Bitcoin ETF that's attracting massive interest. Fidelity has a huge community of long-term investors who trust them with retirement accounts, portfolios, and long-term savings. Before ETFs, many of those customers would have had to open a Coinbase account to buy Bitcoin. But why would they do that now? Fidelity clients can simply buy a Bitcoin ETF right inside their existing accounts. No extra steps, no confusion, no friction. And that kind of convenience is very powerful. If you had the choice between juggling multiple accounts or clicking one button, which would you choose? Let me know in the comments. Then we have the ARK21 Shares Bitcoin ETF. This one matters because ARK Invest, led by Cathie Wood, is famous for taking big, bold bets on future technology. ARK wasn't just interested in Bitcoin, they were early believers. Their audience is full of tech-focused investors who want exposure to disruptive innovation. So now ARK's community doesn't have to fumble with crypto exchanges either. They just buy the ETF. Simple, fast, done. And millions of people trust ARK's vision enough to follow. And of course, there's the Grayscale Bitcoin Trust transformation. For years, Grayscale was one of the only ways traditional investors could get exposure to Bitcoin without touching crypto exchanges. But the fund had problems. It traded at a discount, it had high fees, and it wasn't perfect. But then the moment spot ETFs were approved, Grayscale converted their trust into a full-fledged ETF. Suddenly, it became a major competitor with one advantage. It already had billions in Bitcoin under management. Overnight, it became one of the most stocked Bitcoin ETFs on the planet. Now pause for a second. 4 giant financial products, billions of dollars flowing in, and every dollar that flows into these ETFs is a dollar that might not flow into Coinbase ever again. That's the part nobody wants to say out loud, but it's the truth. If investors can buy Bitcoin in the exact same place they buy Apple stock or Tesla stock, what's the #1 reason for them to sign up for Coinbase? The convenience advantage is gone. And that's the whole point. For years, Coinbase was the bridge between everyday people and the crypto market. But now, the biggest institutions in the world have built a highway straight to Bitcoin, and they didn't ask Coinbase for permission. These ETFs essentially give regular investors a way to buy Bitcoin safely, easily, and with the confidence of recognizable household names backing them. Whether that's good or bad for crypto long-term is a big question, but it's definitely not good for Coinbase right now. Here's something most people haven't even considered. These ETFs could eventually control more Bitcoin than any exchange in history. That changes everything. If ETFs become the main way investors gain exposure, then Coinbase stops being the entry point and becomes more like just another trading platform. But crypto exchanges don't survive when they're just another platform. They survive when they're essential. And ETFs are forcing a future where they may not be. But here's another interesting question. Is this actually good for Bitcoin? Some people say yes. They argue that ETFs bring legitimacy, stability, and massive inflows of capital that could raise Bitcoin's price permanently. Others say no. They argue that ETFs take Bitcoin out of the hands of the people and place it under the control of centralized institutions. What do you think? Is Bitcoin stronger when Wall Street controls huge amounts of it, or weaker? Drop your answer in the comments because this debate is only getting louder. Now, if you're enjoying this breakdown so far, make sure you hit the like button and subscribe to the channel. If you want more videos like this, videos where we break down the biggest financial shifts in simple, clear language, then liking and subscribing really helps the channel grow. And feel free to share this video with someone who's confused about Bitcoin ETFs, because trust me, they're going to want to understand this sooner rather than later. Let's keep going, because the story doesn't end here. What these ETFs have done is create something most people don't realize yet. They've opened Bitcoin to the entire traditional financial system. For the first time ever, pension funds, sovereign wealth funds, retirement accounts, insurance companies, and big institutions can invest in Bitcoin without breaking any rules. This is huge. For years, these big players couldn't touch Coinbase or crypto exchanges because of regulations, custody issues, and risk concerns. But an ETF? That's clean, that's regulated, that's familiar, that's easy to justify. What happens when the biggest pools of money in the world start flowing into Bitcoin through ETFs? We've already seen billions pour in. What happens when it becomes trillions? And the most important question, where does that leave Coinbase? If $1 trillion enters through ETFs, not exchanges, then Coinbase becomes the side door instead of the front door. Some people think Coinbase will adapt. After all, they still make money on trading, staking, custody services, and dozens of other products. They're not going to disappear overnight. But the thing investors are watching closely is this. Coinbase's core identity is shifting. It's no longer the place people go to buy their first Bitcoin. It's becoming a platform for experienced crypto users. But experienced crypto users are a much smaller group than the millions of everyday people ETFs are now reaching. So here's the final question for the end of this video. Are crypto exchanges becoming outdated, or will they evolve to survive? Will Coinbase transform into something bigger, or will ETFs slowly take over the mainstream investor base? I want you to think about this deeply and drop your answer in the comments. Your perspective might help someone else understand this moment better. If you enjoyed this deep dive, make sure you like, subscribe, and share this video for more amazing content. The crypto world is changing fast, faster than most people can keep up with, and staying informed is the best way to stay ahead. Thanks for watching, and I'll see you in the next video.